Welcome back to FinancialFlow. Today we embark on a thrilling journey through the realm of investing as we unravel the captivating clash between two investment giants, exchange-traded funds, ETFs, and index funds. These financial titans have revolutionized the landscape of investment, each offering a unique blend of advantages and trade-offs. Join us as we delve deep into their inner mechanisms and rewind time to uncover the reinventing history that propelled them to the forefront. But before we begin, don't forget to leave a thumb up and subscribe to Financial Flow for more informative financial content. As a thank you, here is a photo of the beaver. Our journey commences in a world of innovation where the seeds of these investment powerhouses were sown. We'll start with ETFs. Imagine the early 1990s, a period ripe for financial innovation. In 1993, State Street Global Advisors unveiled the SPDR S&P 500 ETF, making a turning point in investment history. This groundbreaking innovation allowed investors to trade a diversified portfolio mirroring the iconic S&P 500 index, akin to trading individual stocks. ETFs introduce a new dimension of diversification and flexibility. Now rewind even further back to the 1970s when a visionary named John Bogle set in motion a seismic shift. In 1976, Bogle introduced the Vanguard 500 index fund, disrupting the investment landscape. This marked the birth of index investing, enabling everyday investors to passively participate in the broader market, challenging the prevailing norms of active management. With our historical canvas painted, let's venture deeper into the essence of exchange-traded funds. Liquidity. ETFs are akin to financial chameleons, shamelessly combining the characteristics of stocks and funds. They trade on exchanges throughout the trading day, granting investors the power to buy or sell shares at any moment, unlike traditional mutual funds. Diversification. ETFs are the embodiment of their diversification, offering exposure to an array of assets from stocks to bonds to commodities. This broad exposure acts as a safety net, mitigating the risks associated with individual securities. Transparency. Ever wished you could peek into the inner working of your investment? ETFs offer transparency galore. Their holdings are disclosed daily, allowing you to scrutinize your portfolio's composition and understand the assets you own. Cost efficiency. If you are a saver, ETFs are your best alliance. They are designed for cost efficiency, boosting lower expenses ratios compared to actively managed funds. This means more of your investment dollars can work for you. Now let's shine a spotlight on index funds, revealing their distinctive characteristics. Less is more. Passive management. Index funds adhere to a less is more philosophy. They seek to replace the performance of a specific market index without the need for active management. This passively often translates to lower fees, leaving more room for your investment to flourish. Consistency crusaders. By mimicking the trajectory of market indices, index funds aim for consistent market matching return over the long term. While they might not make headlines with dazzling returns, their steady fastness is their hallmark, simply at its best. If you are not one for constant tickering, index funds are your investment soulmates. They require minimal intervention, making them an attractive choice for investors who prefer a hands-off approach. Tax-friendly alliance. Let's not forget the taxes issue of taxes. Index funds often generate fewer taxable events compared to actively managed funds, potentially leading to tax savings for investors. Let's embark on a comprehensive comparison structuring these investment juggernauts across various dimensions. Costs and fees. ETFs often boost lower expenses ratios due to their passive nature, while index funds may incur slightly higher fees associated with administrative costs. Trading and liquidity. ETFs take center stage with real-time trading and enhanced liquidity, allowing investors to react swiftly to market changes. Index funds, on the other hand, are priced once at the end of the trading day. Investment styles. Active traders may be drawn to ETFs, enticed by their intraday trading capabilities. Meanwhile, index funds cater to be patient long-term investors seeking steady growth. Tax considerations. ETFs parade their tax efficiency thanks to their unique creation and redemption mechanisms. In contrast, index funds could potentially trigger capital gains taxes during the periodic rebalancing process. Let's balance the scales as we delve into the pros and cons of each investment avenue. ETFs. Pros: intraday trading, lower expenses, potential tax benefits, diverse investment options. Cons: temptation for short-term trading, brokerage commissions, potential tracking error. Now let's move to index funds. Pros: consistent, long-term performance, simplicity, lower turnover, reduced trading costs. And cons: limited intraday trading, potential capital gains taxes, and marginally higher fees. As our voyage approaches its zenith, let's pause to reflect on the fascinating historical evolution that propelled ETFs and index funds into the limelight. ETFs. The dawn of ETFs marked a pivotal moment in investment history, democratizing access to diversified portfolios and intraday trading for investors of all stripes. Index funds, Vanguard's audacious launch of index funds laid the groundwork for a new era of investment, challenging the supremacy of active management and paving the way for a more cost-effective approach. There you have it, folks. ETFs and index funds dissected, compared, and explored. As you embark on your investment journey, remember that the choice between these two hinges on your financial goals and risk tolerance. If you found this comparison insightful, please consider giving us a thumb up, sharing with fellow investors, and subscribing for more valuable financial content. Until next time, happy investing. Stay tuned for more enlightening discussion right here on our FinancialFlow channel. May your investment be prosperous and your financial decision be well informed. Take care and see you in the next video.